Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 14th of April. Starting off with the FTSE 100, which has benefited from Trump dropping his trousers on tariffs over the weekend. And here you can see that we're back above the 8,000 level, which we wanted. That's the old November-December support. And heading for the floor of that rising trend channel from the end of 2023, 8,200. If we're really lucky, we'll get an end-of-day close back above 8,200, and the whole tariff decline will be a distant dream, and ideally we stay above 8,000 on an end-of-day close basis today. You can see there's an RSI trend line that's waiting to be broken. We need to get through, 42 on an end-of-day close basis, although obviously normally it is the neutral 50 level to get us back in bull territory. But basically the levels there, 8,000 and 8,200. Moving on to the DAX, and here the situation is that we also have a line that was identified yesterday, resistance line there, that's running through around 20,000, well, call it 21,000 really, and we need to see an end-of-day close above that. Ideally, we stay above the 200-day line now at 19,900, or about 20,000 now, on an end-of-day close basis, whatever happens. If we break through that March resistance line, then the initial target there, the gap there towards 21,700, hopefully will hit in a matter of days. The Dow is next, and here we're all poised for obviously a rebound. If it's the same as the other markets, then we would be back up filling that gap there, 41,600, and that would then again negate the horrors that we've had for the past a couple of weeks. In fact, the Dow future is currently around 40,500, which makes sense in the sense that that is the resistance, the old November support line. Now resistance, ideally we stay above 39,000, which was the summer support area on the way up. Moving along to Bitcoin, which seems to have breathed a sigh of relief in terms of tariff situation. We're back inside that rising trend channel, the September uptrend line there, based at 83,000, which leaves us looking for 90,000, the old pre-breakdown support there from the end of February. 200-day line rising nicely, and there's even a chance actually of the 50-day line starting to turn around later this week and give us the run up to a golden cross. RSI bouncing at neutral 50 as well, so this is looking rather brighter than we were maybe perhaps expecting even a week ago. And the other positive is the way that the new support this month has basically been just around the old resistance back in the March to November period. Moving along to gold, and here it has been party time and continues to be party time. In fact, we were so excited yesterday that we've actually extended the upside there to 3,400, 3,420 even by the end of next month, if we can get a decent clearance of the 3,220 area, which is the top of the current November rising trend channel. So gold looking obviously rather set fair at the moment. The only thing which should spoil the party is if we drag around the initial April resistance in the 3160 to 3,200 area. Moving along to the stocks, and starting off with one which has been a safe pair of hands in the recent past, apart from the rug pull that we had below the 200-day moving average the other week, around 102 pence, but we're back in that rising trend channel from the end of 2023, looking for £1.60 as soon as the end of next month, while we're above the latest resistance of £1.20, maybe allowed down to the 50-day line of £1.17 rather. Moving on to a stock which I try to avoid over the weekend and on Friday, which is Aferian. Here you can see that we've got the shares attempting to stage a comeback after recent decent news. Unfilled gap off the upside, off the low, bullish divergence as well. So initially looking with 3.5 pence, but then 4.5 pence hopefully as soon as the end of next month. So turning around there. On to Capai, which was so pleased with the reaction to its initial news that it's done it again, and had an equally good reaction, at least initially today. The third or fourth target, lost count there on this one, was 0.36 pence, so above 3.36. We're looking for a retest of 0.5, the best levels. Ultimately, the situation by the end of next month could be as high as 0.65 if the company can actually deliver some new news rather than regurgitate the old news. On to Distil, where there was a strange and interesting rally in the stock at the turn of the month, and a couple of weeks later we find what the news might have been, or the inspiration for that rally might have been. The current situation has been gapped through the 50-day moving average at 0.07.5, and are looking quite logically for a retest of the 0.12 area from the beginning of the month. Best case here, if all goes well, is 0.2 pence on a 1 to 2 month basis, while we're above the 50-day moving average. On to EnergyPathways, which apparently got a mention in the Telegraph, which is obviously wonderful. Here you can see that we're still stuck in this basically 5.5 pence to 8 pence range. The 8 pence range really sort of a hard wall of resistance there for the shares, but perhaps with a bit of a mention in the Telegraph, we can clear this 50-day moving average at 6.3 pence and head back to 8 pence again. But still looking a little bit on the tired side, even though we've had a rebound in the neutral 50 area. Ideally, there's no break back below the 5.5 pence level, the floor of the channel, and the 200-day moving average, whatever happens. On to EDX, but there's been a delayed positive reaction to last week's news on another new diagnostic that the company's come up with. Here, an end-of-day close through, I suppose, 15 pence mid-price should give us 20 pence, hopefully over the next few weeks. That is a resistance line projection from January last year, and the upside valid while we hold above the rising 50-day line and the latest gap there at 12 pence. On to Mosman, which I was trying to avoid as well, but looks as though there's something going on, a little bit like the EnergyPathways chart. Here we had a strong candle on Friday, another strong candle today, so looking for the top of the recent range at 0.042 by the end of this month. On to Metals One, where obviously I've been collecting the letters of adulation regarding the call here at around 2 pence at the beginning of February. Current situation is the same as we were saying previously, that above 20 we're looking for 40 pence on this one, with the appointment of Fairfax today, an IR company in the US. Interesting here that we've had that RSI rebound above neutral 50 and the share price stretching yet higher. Mkango is next, and this is also a beautiful rising trend situation. We had 23 pence penciled in as the target, probably for the end of next month, while we're above recent resistance at 15. So above 15, looking for 23 pence plus on Mkango. Moving on to a stock which hasn't had a good day today so far, Pantheon Resources. Must say this is what was a company that caused me to scratch my head, but the rally from November was a drill baby drill rally, and I suppose given the way that most of Trump's policies have gone in recent weeks, it's not surprising that the rug has been pulled, even though obviously the news today was the spark for the decline. What is interesting here, I suppose, is that November-December support there was around 22 pence, so maybe one or two people like catching falling knives would go for that zone. End of day close back above the 200-day line, rising at 33, might be a momentum signal for the brave. Finishing off with Scancell, which had a decent update today, or decent news announcement today with the NHS, which is always a nice thing to have. Here we gapped down back in December. We gapped up today through the 50-day moving average at 8.5 pence, and basically above recent resistance, post-February resistance there at 9.25, looking for the 200-day moving average at 12.3 pence. I think that would be the minimum we would be expecting, hopefully by the end of this month. And best case at the moment, up to 13.5 pence, which is the top of the December gap. But given the how good the news today is, there should be little to stop the shares. That's it for me today. More updates tomorrow.